What if the biggest catalyst for Bitcoin's future isn't a new tech breakthrough or some Wall Street shenanigans? What if it's a 50-year-old accounting rule, a secret hiding in plain sight on the US government's own books? The United States is sitting on the largest pile of gold in the world, over 8,100 metric tons. Yet officially, this treasure is valued at a price that's hilariously out of date, creating an unrealized gain of over $1 trillion just waiting to be claimed. A financial superpower locked away for decades. But as the national debt spirals and the global financial system starts showing its age, people are starting to look for the key to that lockbox. Today we're exploring one of the most powerful yet least understood theories in finance, the great gold revaluation. We'll break down how this isn't just a theory anymore and how it could do two world-changing things. First, light the fuse on a historic rally for Bitcoin, validating it as a true digital gold of our time, and second, bankroll a plan already gaining steam, the creation of America's first strategic Bitcoin reserve. This is the hidden link between the gold of yesterday and the money of tomorrow. It's a story of debt, desperation, and dawn of a new financial era. Now, before we go any further, just a quick reminder, this is for educational purpose only and isn't a financial advice. Always do your own research. The scenarios we're about to discuss are based on public information and analysis, but they're potential futures, not guarantees. With that said, let's get into it. To get why this theory is so explosive, we have to rewind the clock, not to Bitcoin's creation, but to the slow collapse of the last global money system. For decades after World War II, the world ran on the Bretton Woods system. The US dollar was pegged to gold and every other currency was pegged to the dollar. America promised any country could swap their dollars for gold at a fixed rate. This was the foundation of global finance, but by the early 70s that promise was breaking. Thanks to heavy spending on the Vietnam War and social programs, the US had printed way more dollars than it had gold to back them. Countries like France started calling America's bluff and lining up for their gold. The system was about to burst. So on August 15, 1971, President Nixon went on TV and officially cut the tie between the dollar and gold. The Nixon shock threw the world into a new age of pure fiat currency, money backed by nothing but faith in the government printing it. In the aftermath, the US had to decide what its massive gold hoard was officially worth. After a couple of adjustments, Congress passed a law in 1973 setting the statutory price of America's gold reserve at $42.22 per ounce. Think about that, for over 50 years as gold's market price have soared from under 100 to over 2,000, and with some analysts projecting it could even hit $5,000, the official value of the US Treasury books has been frozen. The United States holds the world's largest official gold reserve, about 8,133 metric tons, which is just over 261 million troy ounces. At the dusty 1973 price of $42, the entire US gold reserve is valued on the books at a measly $11 billion. A footnote on the national balance sheet. But what is it really worth? At a modern market price of say $4,250 per ounce, that 261.5 million ounce stockpile isn't worth $11 billion. It's worth over $1.1 trillion. This isn't just a rounding error, this is a $1 trillion asset being officially ignored. This gap between the government's fantasy number and the market's reality is the secret, a financial lever of incredible power just sitting there. For 50 years it didn't really matter, the US could print dollars, the world would take them, and gold in Fort Knox was a relic. But today's world is very different, and the reasons for keeping these $1 trillion treasures locked up are vanishing fast. In fact, the pressure to finally use it is becoming impossible to ignore. So why would a 50-year-old accounting trick suddenly be so important? Two words: national debt. The US financial picture has gotten so grim that leaders are being forced to consider radical ideas that once seemed unthinkable, and re-evaluating gold is moving from the fringes right into that conversation. Let's just look at the numbers as of late 2025. They're staggering. The US national debt has rocketed past $37.8 trillion. That's over $100,000 for every single person in the country. For decades, the excuse was that debt didn't matter if the economy was growing and interest rates were low. Both of those ideas are now broken. The US debt to GDP ratio, a key sign of a country's ability to pay its bills, has shot past 120%. That means the US owe more money than the entire country produces in a year. Worse, the cost of just paying the interest on this debt has become a crisis. With higher interest rates, the annual interest payments have blown past a terrifying $1.2 trillion. That's more than the entire defense budget and the second biggest line item in the federal budget after Social Security. The US is literally borrowing new money just to pay the interest on their old debt. It's a classical death spiral. This can't last. History shows empires often fall not to armies but to the crushing weight of their own debts. The US is now staring them the same threat. Policymakers are boxed in. They can't slash spending without political riot, they can't raise taxes enough to fix it without tanking the economy, and they can't keep printing money forever without killing the dollar. This is where desperation meets opportunity. When you're in a corner this tight, you start looking for a way out, and there it is, $1 trillion asset on your balance sheet that you're pretending is just worth $11 billion. Suddenly, re-evaluating gold isn't some fringe theory, it's a lifeline. It's a way to pull hundreds of billions, maybe $1 trillion onto the government's balance sheet without raising a single tax or issuing more debt. It's an accounting move that could buy massive breathing room. And this isn't just talk. In August 2025, the Federal Reserve itself published a research note titled Official Reserve Revaluations, the international experience, which detailed how other countries have used this exact tool to handle financial stress. The question is no longer if this will be considered, but when it might be used, and the fallout from the decision would send a tidal wave through every market on earth, with Bitcoin standing right in its path. So the moment the US government revalues its gold, it will be the biggest monetary event since we left the gold standard in 1971. It would be a public, undeniable admission that pure fiat currency has a fatal flaw. It's the government admitting that when things get tough, real scarce assets are what truly matter. That act alone would trigger a psychological earthquake for investors, and the aftershock would lead straight to Bitcoin. For years, many have called Bitcoin digital gold, right? It's a simple way to explain its core traits. It's scarce with a fixed supply of 21 million coins, just like physical gold is limited. It's durable, living on a decentralized network that's never been hacked, and most importantly, it's a sovereign asset. You can hold it yourself, no bank or government required. A US gold revaluation would take this digital gold narrative and supercharge it by tying its own financial credibility back to a hard asset. The government would be validating the entire thesis behind both gold and Bitcoin. It would send a clear signal to every investor in the world: the era of trust me money is cracking and the hunt for a reliable store of value is on. The immediate effect would be a mad dash for safety, but this time it wouldn't just be physical gold. Investors would see gold's price spiking because of a government decision and remember its limits. It's clunky, hard to verify, and you can't exactly buy coffee with it. Then they look at Bitcoin and see the same principle of scarcity, but built for a digital world. They'll see an asset that's even more scarce than gold, can be sent anywhere on earth in minutes, and offers true personal custody. The amount of money that could move would be staggering. A piece of the trillion sittings in bonds and stocks would start looking for a new home, one that can't be diluted by a printing press. Gold would do well, but Bitcoin, with its much smaller market cap, would feel the impact exponentially. Think of it this way: a gold revaluation is like the government admitting the financial mothership has a leak. In that scenario, people don't just sit there, they scramble for a lifeboat. Gold is the old sturdy wooden boat. Bitcoin is the sleek new speedboat. Both will be in high demand, but a few $1 billion flowing into the speedboat has a much bigger effect. This event legitimizes the very idea of a non-government store of value. It would change Bitcoin's image from a risky bet to an essential piece of any portfolio built for financial storms ahead. The revaluation of old gold would be the event that anoints the new digital gold. But the story gets even better. That $1 trillion windfall from re-evaluating gold isn't just an accounting entry, it's real financial power, and a compelling theory is emerging about how the US might use it to build a national strategic Bitcoin reserve. This isn't just a wild guess, the groundwork for this has been laid out. A strategic Bitcoin reserve has been created by the US president, and it's estimated to be holding around 200,000 Bitcoins. This is a massive policy U-turn. For years the government have auctioned off seized Bitcoins. A no-sell policy would be an admission that holding Bitcoin is now in the national strategic interest, but a reserve founded only by seized coins would just be the start. The real magic happens when you look for taxpayer-neutral strategies of acquiring more Bitcoin, languages that has been floated in hypothetical policy discussions. This is where the gold revaluation clicks into place perfectly. The government wouldn't even need to sell its physical gold. By simply remarking the gold on its books from 11 billion to over 1.1 trillion, it creates a massive paper profit. This new value could then be used to fund the acquisition of Bitcoin for the strategic reserve, all without adding a penny to the national debt or raising taxes. It's the perfect financial move for a government drowning in red ink. It would allow the US to project strength in the old financial world by re-anchoring to gold, while using that strength to build a dominant position in the financial world of the future by stacking Bitcoin. Think about the numbers. A full revaluation could unlock over $1 trillion. What if the US decided to just put 5 of that toward the strategic Bitcoin reserve? That would be a $50 billion injection into the Bitcoin market, a 10% allocation over 100 billion for an asset like Bitcoin. An influx of capital of that size from the world's largest economy would be like anything seen before. It would trigger the mother of all supply shocks. And this isn't just about making the price go up, it's about geopolitics. By building a huge Bitcoin reserve, the US would aim to stay ahead of rivals in the future of finance. It's a 21st century arms race, but for the world's next reserve asset. The re-evaluation of gold is the launchpad, and a well-funded strategic Bitcoin reserve is the rocket. Okay, so as exciting this all sounds, let's pump the brakes for a second. And re-evaluating a nation's gold reserve, especially for the country with the world's reserve currency, isn't simple or risk-free. First, the act itself could send shockwaves through the global markets. A sudden repricing of the US dollar against gold might be seen by other countries as a form of currency manipulation, possibly speeding up efforts to move away from the dollar. It's a powerful tool, but a dangerous one that could spark extreme volatility. Second, there would be official pushback. While the idea of monetizing assets on the US balance sheet has been floated, prominent financial figures have also publicly stated that re-evaluating gold isn't under serious consideration. These kinds of official denials are significant. They suggest that even if the theory is being discussed behind closed doors, the political and economic hurdles are still seen as too high. Powerful institutions hate radical change, and this is about as radical as it gets. Finally, while other countries like South Africa and Germany have re-evaluated their gold, their situations were completely different. When a smaller economy does it, it's a big deal for them, but it doesn't shake the entire global system. When the United States does it, the whole game changes. So we have to look at this with healthy skepticism. The economic pressure is real, the trillion-dollar asset is a fact, the conversations around the strategic Bitcoin reserves are already real. Connecting all three into a single executed policy is still a future possibility, not a current reality. It's a strategic option on the table, maybe the most powerful one that the government has left, but it's one they likely only use when every other option is gone. So let's bring this all together. We have a 50-year-old accounting rule that has left America's most solid asset, its gold, widely undervalued. For decades it didn't matter. Now with its national debt crisis spiraling out of control, it might be the only thing that does. The US is facing a staggering $37.8 trillion in debt, with interest payments alone costing over $1 trillion a year. This crushing pressure is forcing a search for a radical solution. The Great Gold Revelation Theory stands out as the most powerful option by simply updating the price of its 8,100 metric tons of gold to the real market value. The US could instantly unlock over $1 trillion on its balance sheet. This would hit Bitcoin with a 1-2 punch. First, it would be a global signal that hard money is back, sending a flood of capital towards scarcest digital asset in existence. Second, this paper windfall would be the perfect debt-free way to fund a US strategic Bitcoin reserve, allowing America to use its old money to corner the market on the new money. Of course, there are huge roadblocks and official denials to consider, but the logic is powerful and the motivation that crushing debt gets stronger every single day. The real takeaway is to watch the signals. Pay attention to any new talk from the Treasury or the Fed about the stationary price of gold, monitor proposals about managing national assets. The switch from the fringe theory to active policy could happen faster than anyone thinks. The re-evaluation of gold is the hidden key, and it just might unlock a future where Bitcoin isn't just hitting new highs, it's becoming a core part of the global financial system. Thanks for going down this rabbit hole with me. If you want to stay ahead of the massive trends shaping Bitcoin and finance, make sure you're subscribed with notifications on. I love breaking down these complex stories nobody else is telling you. What do you think about the gold revelation theory? Is it a brilliant escape plan or a financial fantasy? Let me know in the comments. Until next time, stay informed and stay sovereign. I'll see you guys in the next video.